Welcome to Kalkine. We're following this trending news story. And shares of Latitude Financial Group finally made their stock market debut with the ticker LFS on its third attempt. Surging 15% on its listing on the Australian Securities Exchange on Tuesday, an open trade at 2.96 Australian apiece against an offer price of 2.60 Australian and hit a high of 2.99, delivering a staggering profit of 15% to its initial IPO with investors. With its share price spiking to 2.99 Australian, Latitude's market valuation surged to nearly 3 billion Australian dollars and were trading 8.84% higher at 2.83 Australian. However, the trading session of the 20th of April ended with the stock recording a 3.846% increase at 2.70 Australian during the day's trade. The stock hit a low of 2.76 Australian and the highest was 2.99. On the volume front, there was dispersion buying as over 4 million shares changed hands. On the 21st of April, the stock was trading at 2.750 Australian, up 1.851% from the previous close. Latitude, the country's leading buy now pay later company, commenced trading at a time when investors are bidding high on the BNPL stocks amid increase in online shopping in the wake of COVID-19. Australian BNPL space is dominated by instalment behemoth Afterpay, Zipco, OpenPay and Hum. The pandemic proved lucky for the company, as after two failed attempts in the past 3 years, Australia's leading credit provider successfully raised $200 million through its initial IPO. The company issued 1 billion fully paid ordinary shares at an offer price of 2.6 apiece, giving the company a valuation of 2.6 billion Australian dollars. Of 1 billion shares, only 330 million are part of the free float. Under the IPO's prospectus document, Latitude has said that its existing owners, KKR, Vardy Partners and Deutsche Bank, will hold 66.4% shares in the company post-listing. Japan Bank Shinsei Bank will also own 10%, and Latitude has sold 10%, comprising a 9.95% upfront investment in the remaining 0.05% stake to Shinsei Bank for 300 million Australian dollars. The Tokyo-based bank will acquire the strategic stake from the company owners KKR, Vardy Partners and Deutsche Bank. Headquartered in Melbourne, the business was acquired by a consortium of investors led, as said earlier, by Deutsche Bank, KKR and Vardy Partners from GE Capital in 2015. The company operates in Australia and New Zealand and has 2.77 million customer accounts and over 3,400 merchant partners, including Apple, Harvey Norman, The Good Guys, JB Hi-Fi, Samsung and Luxury Escapes. I'm Dean Mitchell reporting for Kalkine.